Sinjuri, nsemmilkom nilqakom għal programmi ieħor ta' Flusek. Illum ser nitkellmu fuq ir-riżultati finanzjarji ta' HSBC Bank Malta PLC ma' żewġ mistiedna tagħna, Geoffrey Fichte, il-kap eżekuttiv tal-bank, u Charlotte Cilia, il-kap tal-finanzi. Geoffrey, Charlotte, I welcome you again on Flusek.
Thank you. It's good to be back.
Basically, I was informing our viewers that today we're going to discuss the financial results of HSBC Bank Malta PLC for the first 6 months of the year. So, basically, Geoffrey, if I can start with you, HSBC Bank Malta has recently announced a profit before tax of 59.3 million for the first half of the year 2023, up from 17.5 million for the same period in the previous year, 2022. To what do you attribute this sharp increase in profits?
Thank you. We're very pleased with the first half results, which, as you mentioned, generated a strong increase in profits, which allowed us to pay a record, the highest dividend in 7 years, 6 cents cash dividend per share to our shareholders. So we're very pleased about that. And there's several factors behind these strong results. We have a very large diversified client base, and so there's a lot of value being driven from that, linked to the increase in interest rates, but also our very adept management of the credit risk in the portfolio. So we've been making good credit decisions. And also, we're investing in our business, but at the same time being careful on the cost growth. Mm-hmm. So the combination of all those factors led to a strong increase in profits.
Charlotte, the bank reported an increase in revenue of nearly 70%, basically, when compared to the first half of 2022, mainly due to net interest income. Can you elaborate on the main factors contributing to this increase?
Yes, of course. So we actually reported an increase in net interest income of 43.4 million, which is mainly due to the increase in interest rates that we've seen across Europe and worldwide. Mm-hmm. Just to give some perspective, if banks placed money overnight with the central bank in June 2022, they used to pay 0.5%, while if they placed the same money in June 2023, they're actually earning 3.5%. Mm-hmm. So there has been a significant movement in the interest rates. In terms of our increase in net interest income, is actually coming mainly from our bonds, our investments in bonds, as well as placements with the central bank and HSBC Continental Europe. Mm-hmm. This is because when you look at the customer loans, the interest rates in Malta have remained relatively low compared to those in Europe. If I look at other revenue other than interest income, we've made good progress on the underlying increase in foreign exchange as well as net fee income, okay, as we continue to leverage on our international connectivity.
Mm-hmm, mm-hmm. With regards to costs now, these have decreased by 13% in the first half of 2023 when compared to last year. What were the main reasons which led to this decrease, and how is the bank trying to control costs?
Yes, we've reported a decrease in cost of 7.5 million. However, to be fair, most of that decrease was relating to one-off items. So in reality, we had an insurance refund on an operational loss that was booked in prior years. And we also had a significant increase in regulatory fees in 2022. Just to give some perspective of the increase in regulatory fees, in June 2022, there was a new legislation on deposit compensation schemes, okay, which required us to accelerate the cash contribution, which was originally planned for 2023-2024. Mm-hmm. So that was the main increase. In reality, this increase was then reversed in the second half of the year as the legislation was changed. Okay. However, leaving aside the one-offs, we actually kept costs constant compared to the prior period, which I would say is still an achievement considering the fact that we continue to invest both in technology as well as in our people, as well as we had significant inflationary pressures.
Mm-hmm. Okay. The bank also reported an improvement in the credit quality, of its loan book. Can you elaborate on what led to this improvement in the first 6 months of the year?
Yes, we booked a release of the expected credit losses of 2.6 million, which is contributed by both business lines, so both the retail as well as the wholesale.
Okay.
The decrease is mainly driven by our projections, by our economic projections. So last year, there was quite some uncertainty in relation to the Russia-Ukraine war, as well as inflationary pressures. And that uncertainty has released a bit. That's one factor. The other piece that we've seen is an improvement in the non-performing loans. So we've actually decreased our non-performing loans by 10% compared to the same period, actually compared to December 2022. And this is relating to two items. First of all, we had customers who had been extended moratoria, who have now been repaying, and we could reclassify them from non-performing to performing. But we've also seen better performance by some of our corporates. And because of the movement from non-performing to performing, we could release some of the expected credit losses.
Geoffrey, back to you. Loans and advances to customers fell marginally when compared to year-end figures of 2022. Do these figures indicate a slowdown in lending and, as a result, a weaker appetite by retail clients and commercial customers to approach banks for loans?
Not necessarily. I mean, we have a large, diversified, very secure loan book from families to companies, different sectors. So, the normal process of banking is you have new customers, you have customers who finish paying off their loans, and there's always a rotation in the loan book. Overall, we're seeing that there is demand for lending. Of course, there's a lot of competition as well, but we're very much open for business, and we're competing for new businesses, and we have a significant pipeline of new businesses. And we're working with the government and other stakeholders to identify new growth areas for our bank.
So also, as interest rates increased over the period, you experienced an increase in personal deposits and a reduction in commercial deposits held with the bank. Can you explain what you think led to this?
Sure. So, starting with personal deposits, the deposits for families and individuals, we did achieve growth in the first half of the year. And I think that reflects, the strength of the HSBC brand and our global footprint and our global backing. And also the service which my colleagues provide on a daily basis to many customers. So we're very pleased about that progress, and we'll continue to support customers, over the coming months and years to help with their savings and their investments. On the corporate side, there's a lot of volatility because companies move big figures. They're always, sending payments, collecting payments. So there's a lot of volatility. But if you look at the averages over the period, they are quite stable. Okay. So that's what we're seeing in our corporate lending book.
Okay. Geoffrey, what is your outlook for the months ahead for the Maltese economy and the bank?
Sure. So we're very positive on Malta. HSBC is positive on Malta. And so that's why we're investing. We're investing to improve our technology. We're investing in our people to make banking simpler and easier for our customers. We're also doing a major investment in a new headquarters here in Malta, which is a 30 million euro investment, the largest of its kind for HSBC in continental Europe. And so we'll be inviting you soon for the inauguration. And this is an important new chapter in the history of our bank in Malta. This will be a state-of-the-art headquarters, which will allow not only really state-of-the-art technology for clients, but also better collaboration between, the different areas of the bank to build the bank of the future. So it's all about collaboration. And going back to the economy, while we are positive, there are certain strains. For example, inflation is still quite high, and it's something which, we're keeping a close eye on. because it does have an effect on families and on businesses. But apart from that, we're listening to our customers. We're hearing their concerns around development. So through our foundation, we're pioneering some really top-notch academic research on how to build sustainably in Malta, working with local experts, but also with HSBC experts globally on sustainability to try to contribute to a solution. We want to be part of the solution. And we're working with the important local stakeholders on that. Another area we hear concern from our customers is around education and future skills. So we're working as well with academics and the Malta Chamber of Commerce, the Ministry of Education, to help identify and then develop, what are those skills that future workers need, whether, through schooling or through on-the-job programs. So we're doing a lot to, invest in the future of the business in Malta and provide proactive solutions for the needs of our customers. All of this, we're very pleased with our first half results. We're working hard every day for our customers. And all of this is possible thanks to their confidence and the hard work of my colleagues. So we're going to have a very busy second half of the year and into next year as well, because banking is a very dynamic business, and we're very committed to the solutions.
Thank you very much, Geoffrey and Charlotte, for being with us today. I augur you and the bank continued success in the future. Thank you again for being with us.
Thank you.
Thank you for having us.
Ħannamlu waqfa qasira ta' ftit minuti għal riklami jibqgħu magħna.